The free spreadsheet you're going to find in this video, I'm going to leave a Dropbox link in the comment section and as well as the description section of the video. You can click the link, follow it, you can download it for yourself. Please do not edit the original template until you download it to your computer so that it does not mess it up for other people and other users. I greatly appreciate it if you did that. I spent a lot of time making this video. There's a lot you have value I've placed in this, so please watch this from beginning to end if you really want to get a lot out of it. And I have also included timestamps. I realize it's a long video, but I do think it's going to be worth your time to watch this from start to finish. So let's go ahead and get started. Hey, what's going on, everybody? It's Mike, and in today's video, we're going to be covering a dividend reinvestment spreadsheet or a dividend reinvestment calculator. Now, this works regardless if you're investing for dividends or if you just want to focus on growth and don't care at all about dividends. Doesn't matter. Either way, this spreadsheet is going to calculate the reinvestment. It's going to factor in the growth, the appreciation, and all of these different factors to help you forecast from where you're at today, right now. 5 years from now, 10 years from now, 15, 20, 30 years from now, where your portfolio could potentially be based on how much you're contributing per month, per year. Quick shout out to everyone out there who's working hard, hustling, trying to build a passive income within the stock market. I know it's a long-term game. Now, whether you're investing for growth or whether you're investing for dividends, either way, best of luck to you. And this video and this spreadsheet, it's really for you. I really do hope it helps you and helps you see where you're at in your journey and how much longer, given certain inputs, it's going to take you to reach your goal. Now, when you look at a spreadsheet like this, especially if you're new to investing, you see numbers everywhere and you're probably thinking like, what in the hell is this? This looks so complex. But I assure you that it looks more daunting than it actually is. The only things you really need to do and to know is gather a little bit of data. And it's across the top here where you're going to see these boxes highlighted in yellow. Those are the inputs this spreadsheet needs to work. And I'm going to help you learn where to find this information. And the spreadsheet and the formulas that are pre-programmed into this are going to take care of the math and do the rest of the work for you. Now, the spreadsheet you're seeing on screen is actually built from multiple different spreadsheets I found online. The spreadsheet I found to be most useful, so quick shout out to Dividend Growth Investing, that's the channel name. He has great content. If you're interested in dividend investing videos, that is one channel I would totally recommend. And what I've done is I've taken different spreadsheets and I've built onto them. And so I didn't create all of this from scratch. I'm just gonna be honest with you. Why reinvent the wheel, right? What's the point of doing that? But I was able to take the different spreadsheets and customize in and build the formulas in for the information that I wanted to see. And so I do hope this is something you're gonna find helpful. So let's dive in and get this started. If you're brand new here, I would encourage you to subscribe to the channel. If you like dividend investing, we produce a lot of videos around investing on this channel. We cover financial news updates, and because I'm a CPA, I do a lot of in-depth videos that cover taxes, especially taxes around investing. So be sure to follow our channel and our weekly videos to stay up to date. Okay, so on this spreadsheet, I'm providing you with two examples to follow. The first example we're gonna look at is the single stock example. It could be single stock, single ETF, whatever. But it's just to show you how this works. Now we're gonna pretend that we're gonna invest all of our money for 30 years into one stock. Now, I know that is like financial suicide in terms of risk management. You would never do that. And I know you guys are smarter than that. You would never do that. But for the sake of understanding how this spreadsheet works and how the numbers work, I think just by looking at a single stock example will help us with that tremendously. So we're going to look at that first. And then after that's done, I'll show you how you can apply this same approach, but do it for every investment in your portfolio so that the numbers you get here represent your entire portfolio working as one unit. So we'll cover that here in just a bit. Okay, so what do you need to be concerned about in terms of inputs? Well, inputs just are across the top here in the highlighted boxes in yellow. That's all you need to focus on. You have your initial investment of $10,000 or whatever your initial investment is. You can enter your starting age. You'll notice if I change this, you notice how the spreadsheet automatically updates the age column there. The monthly deposit amount, you're gonna wanna input that. The annual deposit amount will calculate from this monthly deposit column. Capital appreciation of the stock you're trying to analyze, like what's the average of capital appreciation rate each year, the dividend growth rate each year. That's something you want to take a look at, the starting yield. And I've even included a tax column so that based on your tax rate, you can figure out roughly how much tax you'll be paying on the dividends you earn from this investment or from your portfolio as a whole. Okay, let's look at the presentation now of the spreadsheet from left to right, how to read this. In column A, we have your time horizon. That is 30 years of data here that you can input, and you can drag this out further if you'd like it to be 35 years or 40 years, totally up to you. Column B, we have your age. Column C is your annual deposit amount. Column D is your start of the year portfolio value, so you can see how the beginning value of your portfolio changes from year to year. In column E, we have the price per share of the stock we're looking to analyze, or the ETF we're looking to invest in. This example is American Water Works, which you're going to see here in just a second. The number of shares owned is in column F. In column G is the annual dividends per share. That information you'll actually have to find, but it's really easy to get that information. Column H, we have the yield of that investment. And then column I is actually the yearly dividends earned from year to year. You can see how much income you would earn from this investment every single year as you kept investing in it and reinvesting. So at this point in the video, I realized I have a formula error in terms of the number of shares owned, which is why in column J, the portfolio value is being understated here. So later on in the video, I'm gonna show you that updated version and the numbers are gonna be a lot larger. You will see vastly larger numbers for the number of shares owned, the total portfolio value, and of course the increase in annual dividend income. But for now, let's just keep moving forward. Go! In column J, you have the end of the year portfolio value. So this is like the total. Column J is basically the fair market value of your portfolio. All the dividends, all the growth from appreciation is the total. If you sold it, like this is how much you would get from year to year if you sold off all of your investments. That's how much cash you would have available to you. Column K is basically what did you put in to make this? Like what amount did you invest? So K is your total investment from year to year. And you can see, you can compare and contrast column K and column J to see how much money you've put in versus how much value you're getting out of your portfolio through growth and through yearly dividends. You can compare the two and see how that's working for you. Column L, we have the tax bill. So this is the actual taxes from the amount of dividends earned each year. This is where you can track how much your tax liability is going to be roughly. It's not exact, but it gives you a rough idea of what to put money away for to pay the taxes on this. You would not have a tax bill if this isn't a Roth, but we're assuming that this is just a normal taxable account because you want to retire early. And if you want to retire early, you got to be able to access the money faster and sooner and not have any penalties placed upon you. So that's why if you're investing in a taxable or normal brokerage account, this is the kind of tax bill you might expect just from your dividends. And just so you know real quick, if you're not familiar with taxes and dividends within a taxable account, when you get a dividend, you don't pay tax on that dividend right away. You actually don't pay tax until the following year, typically. So if you receive a dividend in 2021, all the dividends you received during 2021, you probably won't pay any tax on until April 15th of 2022, when those taxes are actually due at that point. If you want to learn how to report your dividends step by step on actual tax forms, this is the video I recommend you watch. It's gonna walk you through it and show you exactly how dividends are taxed. As an added bonus, I've added on column M and column O a variance analysis so you can actually see if you're on track based on your forecast. Because remember, this spreadsheet is a forecast, but you'll want it from year to year. At December 31st of each year, compare what your total portfolio value is in column M, type this in, see what you the real fair market value of your account on December 31st of the end of each year, and compare it to the forecast of column J. So for example, if at the end of the year, your actual portfolio was really worth $35,000, but your forecast shows $41,000, it means your forecast is overstating the growth of your portfolio. And that's what it means. So the smaller this variance number is, the more accurate your projection is, your forecast is to analyze the future growth of your investments. And the same is true for the dividends. So let's say in year one, you actually made 2,000 in dividends in reality. Well, that means comparing that to your forecast here, it means your forecast is understating the growth of your portfolio. So you just use this information to see how accurate your forecast is and tweak the numbers in your forecast so this becomes more accurate, and so the variance becomes smaller and smaller, or at least as small as possible each year. And this will help ensure that you're on track to meet whatever goals you're trying to achieve. Okay, let's walk through how you can fill out the spreadsheet with a stock. And the stock we're looking at is American Water Works, ticker symbol AWK. And let me show you where you would start off by getting this information right here, the annual dividends per share, because that's one input you will need. I just go, to be honest with you, there's a lot of different websites you can go to, but I just go to Yahoo Finance and I look at what the dividend yield is. So per share, the annual dividend per share is $2.41, and that's paid annually. That's paid quarterly. But in total, you'll get 4 payments that add up to $2.41 per share. That's what that essentially means. And you would just come in and you would place that $2.41 right here. Now, the reason mine says $1.12 in the example is because I wanted to mathematically prove that this spreadsheet was working. So I actually went to the historical price history and I went back to 2013 to make sure everything was computing correctly. And so I went to Yahoo Finance, I went to American Water Works summary page, and then I went to historical data. In historical data, I was able to go back to 2013. Let me scroll down here and see what was the dividend back at that during that time period. And you can see the starting share price was $38.90 or $38.28, I'm sorry. So that's where I got that starting share price as a starting point. So that's why I put $38.28 there. And in terms of the dividend yield, it's $1.12, right? That's what it ends up being. So $1.12 divided by 4 payments is 28 cents. And so the dividend payment here is 28 cents per quarter. And that's where that's coming from. And so I wanted to show you that first. Next, we're going to find the dividend growth rate of this investment at the dividend growth appreciation rate for American Water Works. So where do I get this 10.10%? Let me show you. It's really easy to find, especially if you're using Seeking Alpha. Seeking Alpha is one of the best websites out there for investing, up there with Investopedia and websites like that. It's one of my favorite. But if I go to Seeking Alpha and I type in AWK up here, and it brings me to this summary page on American Water Works. From there, I go to dividends, and I'm actually on it right now. So let me just scroll down, and right here where it says dividend summary, this tells me the 5-year dividend growth rate. Now, I've been investing in American Water Works for a long time, and for a very long time, the dividend growth rate of this investment, even going further back than 5 years, is like 9 to 10%, or 9 to 11%, somewhere in there. It's pretty consistent. And so this is where I get my 10.1 on my spreadsheet, and that's why I have 10.1 right here. So that's where that's coming from. The last thing we need to find is the capital appreciation rate of American Water Works. Now, the starting yield of American Water Works back in 2013, which is where I started my analysis at, was actually 2.92% or 2.93, which is calculating automatically, but you can also calculate it for yourself. It's simply, the yield is simply the dividend per share, which is back in the starting amount here in column G of $1.12, divided by the price per share at that point in time, which was $38.28 that we saw from Yahoo Finance. So there's the 0.0292. So that's where the yield is coming from. But the capital appreciation rate, luckily, there's a website I learned about, and I didn't know this was I didn't even know about this website, if I'm being honest with you. So shout out to Dividend Growth Investing Channel, and he was the one who directed me towards this website, and it's really cool. And I will leave a link to this website in the description below. It's got a really weird address. I mean, look at that. I mean, who's going to remember that? But you can quickly find the total stock market return our stock total return and dividend reinvestment calculator on this website. So it's really cool. And just by putting in American AWK, this ticker symbol for American Waterworks, the starting investment amount, let's say you invest 10,000, and the date range you want to analyze. So we want to analyze, and this, in my case here, I want to go from 1/1/2013 to now to 6/29/2021, and then all you do is hit calculate return, and then right down here, this is the annual return right here. This is the average annual total return of this investment. But this includes that starting dividend yield of 2.92%. So what you'd want to do is take the 20.66, which you're seeing right here, and subtract out the yield of 2.92. And so that's how we get the 17%. Now I just rounded down to 17. I could have rounded up to 18, but I just wanted to do 17. It's fine by me. Remember, this is just a forecast. It doesn't need to be perfect. As long as you're within a percentage point or two of where you need to be, you should be okay. And you can just, like I said, track your actual result as you go. So that 17% now, I'm putting right here, capital appreciation of 17%. And with this data, we're able to have the spreadsheet calculate the rest. So let's see how this plays out. The results of reinvesting in a company that has a compounding annual dividend rate of 10.1% and an average growth rate or appreciation rate of 17% yield some serious results. After reinvesting $30,000 a year every single year plus dividends into this investment, after 30 years, your portfolio would go from, starting with $10,000, would go from then $41,000 in the first year all the way down to $26 million after 30 years. Holy crap.
Dominating!
Now you might say, well, there's no way, Mike, that we're gonna get these kind of results for 30 years straight. And you're probably right. So you can easily just tweak this just by a couple of clicks of a button. Just type in different rates if you wanna see how things progress. Whoops, that's not the way to do it. You have to type in 0.05, there we go. So you can easily tweak this. But the bottom line is you can easily adjust these numbers and just watch it grow. Now, the thing to point out here, let me get the numbers back to what they were, is that in this case, and you can play, I want you to play with this with different stocks, and you can really learn how this all works. When you have an investment that has a capital appreciation rate of near 17%, then you pretty much have a growth stock. American Waterworks is more of a growth stock, in my opinion, than it is like an income stock, because it grows at a faster rate than it grows the dividends. And when you have that happening, because your dividend growth rate is about 10%, as you can see here, you have $1.12 in the first year, then it becomes, your dividend per share becomes $1.23, the next year after that, $1.36, and so on and so forth. But what's happening is the value of the underlying shares keeps increasing at a rate of 17%. And so when you're reinvesting your money into this stock, you're paying more and more and more and more for it. And so therefore, your yield of 2.93, which you start out with, actually keeps decreasing. So your yield gets smaller and smaller and smaller. But of course, the overall growth of your portfolio is massive because of the capital appreciation. Now, you still end up with a dividend income of $131,000, which is pretty fantastic. But let's just say if your growth rate was only 5% and you had a dividend growth rate of 10%, leaving that the same, you can see a much different picture where you could see that your annual dividend income would be about $1 million, but then your total portfolio value would only be about $8 million. So it just depends on the compounding annual dividend growth rate. It depends on the capital appreciation rate. And these numbers, they are going to change over time. So every so many years, you should probably be updating these numbers up here to make sure this is still realistic. And like I said, if you're tracking your actual results at the end of each year on December 31st, you're plugging in your actual results to the right here, then you're going to see what's realistically happening versus what your forecast values are showing. And I think you're going to learn a lot just from playing with the spreadsheet and seeing what you need to do, what kind of results you need to get to end up where you want to be in whatever time period you're looking to accomplish this in. So that example is just with one single stock. But now I'm going to show you how you can take this same forecast and apply this method to your entire portfolio, regardless of how many stocks or ETFs you may own. And the way we're going to accomplish this is I'm going to show you how you can apply a weighted average approach to your portfolio and where you can gather the information and data you need in order to run this analysis. Is if you come to this example A tab, let's just pretend you have a portfolio of 3 stocks, and these numbers are just all made up, okay? I did not use the real numbers from Yahoo Finance for this. I just want to clarify that. This is simply for the sake of an example. But let's pretend you own Duke Energy, you own McDonald's stock, and you own Texas Instruments. Let's say you have 100 shares of Duke Energy. Your cost is $2,430 for those shares. McDonald's, you own 75 shares for $8,000. And Texas Instruments, you bought 50 shares for $5,000. Your total cost is $15,430. The way to analyze this is based on the total cost of each investment, because we're going to take a weighted average approach to find this information. What this means is that based on a cost basis, Duke Energy is about 16% of this portfolio. McDonald's is about 52%, because about half of the cost is just in McDonald's alone. And Texas Instruments represents about 33%. So there we have it. Now, cost per share is simply the total cost divided by the number of shares. That's how we come up with the cost per share. And that's how that is calculated. So that's that. But here's the things that you need to find out in order to do this. But you would do this for each investment in your portfolio to make this work. So it takes some time, especially if you have a lot of investments. Using the website here, the stock market total return calculator, you can figure out what the total annual return is on those investments. Just remember though that this is the total return that it's going to give you. And so you just want to make sure to back out, if it has a yield, make sure you subtract out the yield from this to get the capital appreciation portion of the growth, and not the yield itself, because the yield is separate from capital appreciation. So that's where you can find the total return averages information. So just like we did with the first example, that's where you can find that. Dividends per share, you can simply go to the summary page of Yahoo Finance and it will tell you how much dividends are being paid for every single share you own. So that's easy. The yield is basically going to be whatever the yield is at that point in time. You can find that on the Yahoo summary page as well. And when I say Yahoo summary page, I just mean this page right here. For each investment, just look at this and it'll tell you what the yield is, the percentages, dividends per share, the price per share, all that kind of stuff is found right there. That's where you can go. Then the compounding dividend growth rate, remember, I like to use Seeking Alpha for that. I totally recommend Seeking Alpha. Remember, you're just going to go to the search, the ticker symbol here in Seeking Alpha, and then go to the dividends tab, dividends right here, and scroll down to dividend summary, and it will tell you what the 5-year CAGR is, or the compounding annual dividend growth rate. It will tell, that's what it will show you, and that's where it will provide you the information you need to fill this out. But so you can see that's time consuming, right? But if you did this, I've set up the formulas down here for you, so it takes the weighted average cost per share down here, the weighted average 5-year return, the weighted dividends per share, the weighted yield per share, the weighted compounding annual dividend growth rate per share, and these numbers right here, all of them, of course, are pulling from the information you put up here. So if you put this information in up here, this will automatically calculate for you down here. And you can add more rows to this. You can extend the formulas down so you can add more investments if you want. But your inputs would be this, because what you're getting at, conceptually what's happening in this example is you're taking multiple investments, whether they're stocks, mutual funds, or ETFs, and you're treating them as one unit. How do they all work together with the yields, different yields they provide, the different costs you've invested in each one, and so on and so forth. The average capital appreciation. So all of these will come together to work as a single, pretend it's a single stock is what I'm getting at here. And you would take this information, so this would be like the share price, okay? So of your portfolio, to buy one share of your portfolio based on this weighted average formula would cost you $91.53 per share. Your weighted average 5-year return of based on these different returns above is 10%. Your weighted average dividends per share is $3.58. Weighted yield is 3.9, and your compounding annual dividend growth rate on this is 7.58. So what you do is you switch back to this tab on Portfolio A. You can see up here would be the 3.9% yield that I've put, the dividend growth rate, the 7.58. Remember, that comes from right here. The price per share is the starting price per share is $91.53, and the annual dividend per share is $3.58, and all that comes from this calculation right here. So here's the starting share price, and here's the weighted dividend per share price. And also, capital appreciation is, oops, I don't think it's supposed to be 6%. Capital appreciation is actually supposed to be 10%. So you would put 10% up here, or 10.09 to be accurate. And that's how that would work for your whole portfolio. But you just have to go through the process of breaking out this information for every single stock or ETF you own. Now, I did this. It took me a couple hours because I have, like I said, 30 to 40 investments. But to me, it's worth it because now I can be a lot more confident that moving forward, my projections are going to be more accurate, and I'm much more likely to hit my goal. I can see if I need to invest more, if we can just invest less based on what we already have, and we can move forward from there. But that's how you would do this for your whole portfolio, is take this one stock at a time, hunt down this information, and then treat this as your whole portfolio as one single stock. So best of luck in your investing journey, whether you're investing for growth or dividends, it doesn't matter. I think this spreadsheet can serve you either way. All right, everyone, thank you so much for watching the video. Leave a like if you enjoyed the content. Make sure you subscribe for our future videos around dividend investing, taxes, and finances. Until next time, have a wonderful week. I'll see you down in the comments. Live life uncaged.